Remember, this is not just about politics and markets. This is about millions of dollars, if not more right now, that we are looking at worth of money. Joining me now on India Today this morning is G. Shokalingam. He's the founder, economics, research and market expert as well. Sir, good morning and welcome to the show. How are you looking at the markets? What specific sectors do you think have shown the kind of meltdown that's clearly a result of what Donald Trump has announced?
Yeah. Oh, there is no need to panic on the market. Yes, it's a painful, no doubt, and it will have impact. But India is basically a domestic-driven economy, and the exports to US is hardly 2% of the total GDP. Overall export is only 10% of India's GDP. The 90% is driven by domestic demand as well as IT service exports. So let us not forget the fact that IT services are not under tariff war by US. So obviously this would mean focus on domestic demand driven sectors, which have nothing to do with export business. So something like telecom, Indian banks, and domestic cement, domestic pharmaceutical companies. So these are some of the themes. There is no need to panic at all. And then you have a land bank, the real estate stories. A lot of real estate stories are unfolding, which have nothing to do with the external demand. So
what should the investor do, Mr. Shokalingam? They're watching you right now. And what about the money that we are literally banking onto the markets? What should an investor do today, especially as the markets are showing this meltdown?
If you are holding on to domestic demand-driven stocks, don't sell it off due to panic. So look back the history. Every year, every time when market tanked like this, within a block of 3 to 5 years, it has recovered a lot. So don't get panic and sell off the stocks which are engaged in the businesses which are domestically driven, which have nothing to do with exports to US or even other economies. So that is what the message I would give clearly.
Very important. Mr. Shokalingam, please stay on with me. Also joining us is my colleague Vidya. She's right at the Dalal Street in Mumbai. Also, Shailendra Bhatnagar joins us. He's our chief analyst and editor, markets from Business Today. Vidya, first to you. We usually use the term the bloodbath on the Dalal Street and similar. What are you looking at this morning? There must be a lot of chaos and commotion.
In fact, what we had seen in the last many, months, weeks, in fact, since the tariff war had really started, and there was an indication that the tariff war would start. Since then, world over, there was a lot of meltdown that we had seen, but the Indian stock market was still holding on, though, it was slipping continuously. But certainly today, with almost every global coming down, crashing, it does seem like the Indian market cannot remain unaffected. Though, we have spoken to some of the experts and they were saying that people should not really panic and sell off right now. Though no one knows what the bottom would be of this particular bloodbath. But as of now, the advice is to, sell only which one really needs to sell right now, or else hold on to it until the stock market really recovers.
On with me, Shailendra, I come to you. Tell us now that the Nifty and Sensex have opened, what does it look like? And this is not just about Indian market. This is, every time I'm checking on the markets of any nation, especially in Asia, it's showing, even in Australia, in fact, it's showing a downturn, it's showing a meltdown.
Yes, again, the word that you use, meltdown, is apt. If we are down 4%, then Hang Seng is down 9.5%. Chinese and Taiwanese and Korean shares and Japanese shares are down between 6 and 7%. All asset classes are falling, whether they are commodities, yields, currencies, or equities. Equities you've pointed out. Ma'am, this is a time of extreme pain. One has to be very, very cautious in terms of outlook. It has to be for a very long time now, between 3 and 5 years, if you want to invest at this point of time. But let me make one thing very clear. The low on the Nifty that you saw on June 4th, which was somewhere like 21,300, most likely that will also be tested in the coming days. This is a global tariff war. It has nothing to do with how your domestic demand will shape up, how your businesses will function. This is about a war. Unless the war quietens down, 2 elephants, 5 elephants are fighting. It is the grass that is suffering. My suggestion is, if you are invested in mutual funds, if you have systematic investment plans in place, please do not stop them. Do not catch a falling knife at this point of time unless you want to approach it with a systematic investment plan. Rest, fixed deposit is the best asset.